Lender's mortgage insurance, or LMI, is a one-time insurance premium that you pay when you borrow more than 80% of a property's value. In other words, if your deposit is less than 20%. But here's the kicker. LMI protects the lender, not you. If you default on your loan, LMI covers the bank's loss, not yours. So why do you have to pay it? Because from the bank's point of view, lending you money with a small deposit is riskier. So LMI is their way of managing that risk. LMI isn't cheap. It's calculated based on the size of your loan, the size of your deposit, and whether you're an owner-occupier or investor. Let's say you're buying a $700,000 property with a 10% deposit, that's $70K down, leaving a loan of $630,000. Your LMI could easily be between $15,000 to $20,000, and it's often added to your loan, so you pay interest on it too. Now you might be thinking, why would anyone want to pay LMI? Well, sometimes paying LMI can actually be a strategic move, especially in a rising market or if you're keen to get in sooner. Let's say you're renting and house prices are going up $10,000 to $15,000 every few months. Waiting to save a full 20% deposit could mean paying more for the same property later. Also, by entering the market earlier, especially as an investor, you might start benefiting from capital growth, rental income, and tax deductions sooner. So yes, LMI stings, but in some cases, it's the cost of entry, not a mistake. But here's where it gets interesting. If you're buying an investment property, the ATO lets you claim LMI as a tax deduction, but not all at once. It's claimed over 5 years as a part of your borrowing expenses. Let's say your LMI was $10,000 for an investment property. You can deduct $2,000 per year over 5 years in your tax return. But remember, this doesn't apply to owner-occupiers, only to investment loans. Make sure to speak with your accountant to get this one right. Want to avoid or reduce LMI altogether? Let me give you a few tips. Save a 20% deposit. Well, that's the obvious one. Use a guarantor, like a parent, offering equity from their home. Look for low deposit home buyer schemes, like the first home guarantee. Compare lenders. Some offer discounted or waived LMI for certain professions like doctors, lawyers, or engineers. So, is LMI a scam? Not exactly, but it's definitely not insurance for you. It's a fee, and like any cost, it should be weighed against the benefit of entering the market sooner. If you're buying investment property, you can at least claim it as a tax deduction over time, softening the blow. Let me know in the comments, are you planning to pay LMI or waiting to save more? And if you found this video helpful, give it a thumbs up and subscribe for more Aussie property tips.